Hey there. Let's be real. Most of us can't stand taxes, especially when it feels like our hard-earned money is being wasted while the ultra-rich seem to get a free pass. You've seen the headlines, billionaires and big corporations somehow paying less in taxes than a school teacher or small business owner. And you might be thinking, wait, isn't that illegal? Well, not exactly. The rich don't break the law. They bend it with the help of tax havens. But what is a tax haven? How do they work? And how do rich people and global companies use them to dodge taxes legally? Stick around, because in this video we're diving deep into what tax havens are, how they work, real-world tricks used by companies like Apple and Google, and why some countries actually want to become tax havens. Let's get into it. Alright, first things first, let's clear up the name. It's tax haven, not heaven, although for the ultra-rich it might feel like heaven. A tax haven is a country or territory where people and companies pay very low or even zero taxes. But that's not all. It's also a place where your financial information is kept under lock and key, complete secrecy. So, imagine a place where you don't pay taxes and nobody knows how much money you're hiding. Sounds like a dream, right? Well, for the wealthy, it is. But here's the twist. There's no universal checklist that defines a tax haven. Still, most experts agree that a typical tax haven has 3 key features. Little or no taxes, whether it's income tax, corporate tax, or capital gains, they're close to zero. Strict financial secrecy, your identity stays hidden. These countries rarely cooperate with international tax authorities. Political and economic stability. Rich people don't want to park their money in a place where the government might collapse overnight. Now that you get what a tax haven is, let's talk about how the system actually works. Let's face it, not paying taxes might sound shady, but in the world of billionaires and global corporations, it's all done legally through clever loopholes and smart strategies. Let's break down the 3 most common tricks the rich use to work the system. Trick 1. CFC, Controlled Foreign Corporation. This is when a company sets up a shell company in a tax haven. No office, no staff, just a name on paper. Take Apple, for example. Between 2009 and 2012, they legally avoided paying $44 billion in taxes using this strategy. Here's how they did it. They created a shell company in Ireland, a known low-tax jurisdiction. In the US, companies are taxed where they're registered. In Ireland, they're taxed where they're managed. Apple exploited this mismatch. They registered in Ireland, but managed the company from the US. Result? Neither country taxed the income. Boom, no taxes paid. Trick 2. Transfer pricing. Here's how this works. Let's say a US-based shoe company, Wee Wee Shoes, earns $1 million in profit. Normally, they'd owe around $210,000 in US corporate taxes. But instead, they open a branch in the Cayman Islands, where corporate tax is zero. Then they do something clever. They transfer the rights to their logo, designs, and brand to the Cayman branch. Now when Wee Wee sells shoes, they pay $900,000 in royalties to their own Cayman branch for using that brand. That reduces their US profit to just $100,000, meaning only $21,000 is taxed. The rest? Sitting tax-free in the Caymans. But how do they bring that money back without paying taxes? Easy. The Cayman branch gives a loan to the US company. And remember, loans aren't taxed because the government assumes you'll pay it back with interest. So now they've got access to their money and avoided taxes. Trick 3. The double Irish with a Dutch sandwich. Yes, that's a real name. Nope, we're not talking about lunch. This was one of the most powerful tax dodging schemes ever. Here's how it worked. Wee Wee Shoes sets up 2 companies in Ireland, one of which is controlled from Bermuda, a 0% tax haven. They also set up a middleman company in the Netherlands. The US company pays royalties to the first Irish company, which sends it to the Netherlands, which passes it to the second Irish company, which finally sends it to Bermuda. At every step, they avoid local taxes thanks to special treaties. Result? The money lands in Bermuda untaxed and later gets returned to the US as a loan. Fun fact: Google and Apple used this strategy until the EU forced a shutdown in 2015. It officially closed in 2020. You might wonder, if no one pays taxes, how do these countries survive? Well, most tax havens are small countries with little industry or natural resources. By offering low taxes, they attract billions in foreign investment. They make money through registration fees, banking services, trusts and insurance, and annual company fees. To you or me, a few $1,000,000 in fees sounds small. But for a tiny nation like the Cayman Islands, with a population of just 90,000, one big company paying $5 million in fees can account for 1% of their GDP. It's a win-win. Here are some of the world's most well-known tax havens: Cayman Islands, Bermuda, Bahamas, British Virgin Islands, no corporate or income tax. Singapore, Hong Kong, Cyprus, Luxembourg, low tax rates with financial secrecy. Switzerland, Liechtenstein, Panama, Monaco, known for their banking privacy and low taxation. So there you have it, tax havens in a nutshell. Legal? Mostly. Fair? That's another story. And while the rest of us file our taxes and hope for a refund, the ultra-wealthy are playing a whole different game, one that was designed for them to win. And if you found this video helpful, give it a like, subscribe, and hit that bell so you never miss out on financial insights that actually matter. See you in the next one.